The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you. Super Thursday continues. With your money, your call.
Good evening, friends, and welcome to Super Thursday, the show that aims to add thousands of extra dollars to your superannuation. I'm Sam Henderson, back in the chair tonight after 2 weeks off. I've certainly missed you all, so make sure you jump on the phones. 1300 30 34 35 is the number to call to have your financial planning, retirement or superannuation questions answered by my expert panel tonight. So we hope the phones run hot. There is a free book in it for you, so do be sure to give us a call, 1300 30 34 35, or you can email us super@skynews.com.au if you are feeling a little bit shy. A special hello to those of you watching us on IQ over the weekend or listening to us on the podcast. We've had plenty of questions from podcasters over the last few weeks, so hopefully you're getting a bit of value out of that one. Now, joining me tonight is Adam Goldstein from Skeggs Goldstein tonight, and special guest Brett Evans, Managing Director at Atlas Wealth. He's a specialist advisor for Aussie expats. Brett, you specialise in expats. Tell us a little bit about that.
Look, it's an amazing market. There's over 1 million Aussie expats offshore, so it's almost like the forgotten group. We manage clients in over 20 countries, and it's a growing base. You know, stereotypically in the 80s and 90s, an expat was in legal, finance, aviation. These days, it could be anything. You know, we've got landscape gardeners, we've got, you know, just an amazing array of people who can go overseas and work, and you know, people who, especially we're seeing with China. China's got an insatiable demand for our intellect. So we're seeing dairy farmers moving to China. We're seeing all these different people who in the past never would have had the role of being able to go overseas, now are able to go overseas and almost monetise their experience. Yeah,
a lot of construction going on in China and Dubai and those sorts of areas, so it's been a very interesting period. Many Aussies like the idea of working and living in a foreign country or even retiring abroad. If you're planning on working or moving abroad, you need to have your superannuation in order before leaving the country. Now, we're joined here by Brett Evans tonight, who specialises in exactly these sorts of issues. Now, Brett, what are some considerations for people before they leave the country with respect to their super?
Well, I think the issues that we deal with is when you live in Australia, you're surrounded by the news and the press about taking super seriously. As soon as people get on that plane to go overseas, it's just a distant, you know, one-page quarterly report or an annual statement once a year, and usually that gets filed away. I should do something about that, but they never do. People often have multiple super funds. And I think we'll get it around it one day, we'll consolidate. They go overseas and just nothing ever happens. So, you know, certainly consolidating super before you go is a massive part of it. You know, we've got a bit of a running bet at work when it comes to can they guess what their investment allocation or asset allocation is inside super. And right now it's 50-50. You know, people just don't know. There's the default, whatever the default is, that's what they're there for. So that's another issue that we go through and look at and make sure that they are invested appropriately. We had one gentleman overseas who had been sitting in cash for 5 years, didn't even know it. Thought he had a great run post-GFC, gave the instructions to become invested after the GFC went down, and they didn't obviously follow through on that, and then nothing happened. So that's an issue as well.
Now, self-managed super funds, you cannot be a non-resident and have a self-managed super fund unless you have a power of attorney or someone else managing it for you. Central management control is the way the legislation states it. Are you winding them back as people leave to go overseas? How are you managing that?
There's probably 3 ways we deal with the SMSF side. The first one is usually we roll them back into a retail or industry platform. The reason for that and the benefit of that is you can contribute to super when you're back in retail or non-SMSF type platforms, whereas obviously with an SMSF, if you do appoint a power of attorney and control in Australia, you can't actually contribute to your super while you're overseas. So that's a big one there. Sometimes it's not as easy to do that because they might have property or very specific holdings inside of the SMSFs. So what we'll do there is look at bringing in someone and trying to convert it into a small APRA fund. That's often quite a common course, but what they'll...
A lot of viewers wouldn't know what a small APRA fund is. Maybe you could explain to them what a small APRA fund is, because there's not a lot of them around. There's not a lot of providers. it's an alternative to having a self-managed super fund whilst you're overseas.
That's right.
How does it work?
So essentially, with a self-managed super fund, you're the trustee of your own fund. When it becomes a small APRA fund, a company is appointed to act as the trustee of your super fund. So the way it works is you essentially become the beneficiary, but what will happen is often the small APRA, the new trustee will place certain restrictions on, there's diversification rules. At the end of the day, it's their skin when it comes to the successful management of that SMSF. So you may think you've got it set up correctly, but they'll take over and they'll make some changes. They'll ask for mandated sell downs over a period of time. We've seen SMSFs where they have a single stock concentration of the stock that the person in the company they work for. So
it's very common.
They'll ask for that sell down to occur over time, and other stocks they'll bring in, blue chips, and build up the other side of it as well.
And how do they charge?
Funds under management.
Yep.
They're not the cheapest way. Usually we say to clients the cheapest way to go is from an SMSF back to a retail fund.
Yep.
If you're looking at making it a small APRA fund, you could be up for $5,000 and $6,000 a year. It's quite expensive, yeah.
Yeah, okay.
But it is a solution if you've got property. You can't move property back into a retail fund. So it is a solution, but not the best solution sometimes.
Very good. Now, we do have to take a short break, but when we return, we'll have plenty more of your questions on retirement strategies and superannuation, and plenty more emails as well. Now, if you have a question for the panel, all you need to do is dial 1300 30 34 35, or you can email us super@skynews.com.au. Don't forget to follow us on Facebook. You can find me at Henderson Maxwell on Facebook. We are going to say goodbye to Brett. Brett, thank you very much for joining us tonight. Hopefully, if you're an expat, you're listening to us on the podcasts overseas, Brett's your man. Give him a buzz. We'll be right back in just a few minutes.